Trumpian tariff. So I'm just using that Trump signature hand move, right? Trumpian tariff is having so many Americans today in panic mode. So it just looks like we are in this new era of the stock market. People are watching their retirement funds diminish greatly. In fact, some stocks are losing as much as 40% in as little as just 2 months. 401ks are being depleted, and it's more a sorry situation for those who are retiring soon. Welcome to Aflyn Finance channel. I'm here to show you exactly how to be financially ahead and secure. So if you're yet to subscribe, please do so and turn on your notifications. Now let's get into the topic of today, and it's about the tariffs and how they have affected the stock market. We have seen these tariffs, we've seen reciprocal tariffs, and the result is a bloody stock market. I'm making this video today on the 4th of April 2025. Now, in the last 5 days, the S&P 500, the strong indicator of what people think about the US economy, has dropped over 6.8%. That's really big. In 1 month, it has dropped by over 10%, and year to date, that's from January 1st till April 4th, it has dropped over 12%. Just over 3 months, a little over 3 months, we are seeing this huge loss in the stock market. So what does this mean for a person who had $1 million at the beginning of the year? Now they have $880,000. So this person is behind on the goals they thought they were close to at the beginning of the year. So I can imagine the panic that everyone who is retiring soon, or anyone who is even already retired, or they are planning to liquidate some of their stock investment for their children's education, that panic, because now they wouldn't have sufficient funds to really cater to what they plan to cater to. Guess what? This is not new. In the 2000s, the stock market had these 3 consecutive years of losses. In 2000, 2001, and 2002, there were losses of -10, -13, and -23% consecutively. Wow, that makes me shiver. So it makes me think, hey, hope we are not going to have a repeat of those years. Now, in 2000, 2001, and 2002, the reality was that if you started with $100,000 in the year 2000 and you experienced the losses of 2000, 2001, and 2002, you ended up with $59,000. Imagine if you were retired around the time and you planned that $100,000 would suffice, but now you have $59K. Add that to the inflation of the time, you are doubly screwed. Please forgive my French. Also, fast forward to 2008, the stock market crashed almost 40% in 1 year. Very, very dangerous situation. Imagine you have calculated at that time that you needed $2 million for retirement, and you had successfully saved, working for maybe 35 years of your life, and by the beginning of 2008, you have saved all of this $2 million. Life is about to get good. All the plans you've had that you couldn't take, those vacations, now you plan to take them. And your goal is that, hey, at the end of 2008, by December, you are off to your beach house in Hawaii to enjoy your retirement years and your years of hard work and diligent saving. Then suddenly, your money starts dripping out, just like it's happened in the last few months. December ending, you just have about $1.2 million. Now, this means that $800,000 has been scraped off by the market. So, it happened in the early 2000s. It happened in 2008. It happened in 2022, where people lost 20% of their investments in the stock market. It's here right before our eyes in real time. It's happening yet again. Yes, the market always bounces back, but not as fast as it crashed. Do you know that a 50% loss in the market requires a 100% gain to recover your losses? So when people say, hey, wait out the market, how long do you have that chance to wait? For example, you have money saved up for your kids in their college fund, and it's time for them to go to college. It's time for you to liquidate some of the funds to send them to college. But now you've lost some money, and the market, you don't know when it's going to bounce back. So that the market bounces back does not fly when you are retired and you need to liquidate at heavy losses, or when you need to send your kids to college. That's why people run out of money despite diligently saving up. The Trump trade wars may have the best intent in make America great again, but they have a bad impact right now on people's investments. There's a comment I heard from the Treasury Secretary that people retiring today don't care so much about the day-to-day performance of the stock market. I really don't think that's correct, because they have current day-to-day expenses, and these expenses are financed by current selling of their retirement nests. So what this means is that right now, quite a number of people are planning to postpone their retirement by a year or two so that the market can bounce back. And that's not a certainty, right? Now they have to suffer for a few more years instead of relax, sit back and retire. So even for those that are already retired, they cannot decide to postpone retirement. So the question for you now is very simple. What account do you have that grows your money uninterruptedly? No market panics, no slow fixed growth either. Let me give you an interesting scenario. If you had a portfolio that gave you all of the gains of the market without cap, usually without cap, when the market is great. The market was great in 2024. So imagine you have all the greatness of the market in 2024. And now, in addition, protect your money from the downturn we're experiencing right now in 2025. Wouldn't you think that this is some kind of hack or plain magic? You know, in 2020, I had this really close relative of mine who had the problem of a market downturn, and he was pretty much close to retirement. And COVID had caused this huge crash in the market. In fact, by March 2020, the year-to-date performance of the market was around minus 33%. Huge losses. So he was very close to retirement, like I said earlier, and he had lost all of this money. So he was having panic attacks. That's what the market does, heart attacks and panic attacks. And he had to call his fund manager to close out his holdings at such huge loss, and he actually locked in those losses because he sold out and he made those losses permanent. Now, do you think if he had this market downside protection, do you think he would have had that panic? Of course not. So think about this question. What account do you have that grows your money uninterruptedly? Of course, the answer is not bonds, because the growth is rather fixed and more conservative. In fact, interest rates do drop. So, not a good solution, right? And of course, your savings account is clearly out of the equation. Your certificate of deposits, that 1%, 2% interest account, oh please, it's on the average, it doesn't beat inflation. Now, one thing I have done as a financial professional is that I've helped countless clients establish what I call the accumulation miracle. Yes, it's the equity index portfolio that gives you all of the gains of the stock market, but none of the market downsides. It's like walking into a casino and all you do is win, or break even. So it's a portfolio that grows your money, and a lot of the times without an upside cap, but has this downside floor of at least 0% to protect you from losing money. Think about it. When the market is rising, falling, and playing what I call catch up and slide back. You try to catch up, then you slide back. Would you love that you are able to grow and protect your money? So when I say grow, I mean grow when the market is great, protect your principal and gains when the market falls. In fact, in such a scenario, you win and get tired of winning because that's all you do. Win, right? And this is the index strategy of accumulation. In case you missed it the first time, there's only one direction, and that direction is up. When the market is positive, you grow, and when the market is negative, you protect your principal and all of the gains you've made up to that point, such that when the market bounces back, you don't start from the bottom, you start from where you were before the crash. That's the ultimate protection against losing money due to the current Trumpian tariff wars or even any future market crashes. So we don't know when this temporary correction will be over. Will the market bounce back this year, or are we going deeper? Many people are predicting a recession. So we've had the first quarter of losses. So if we see another quarter of losses again, we may be getting ourselves into a recession. So we really don't know when this temporary correction will be over. We don't know if the market will bounce back this year or next. We just don't know. So it's an amazing financial strategy not to rely on the uncertainties that lie ahead. I like guarantees. I really do like guarantees. And that's one thing I like about equity indexed accounts. So, hey, I'm going to stop this video here. So what's going to happen is this. If I get enough comments in the comment section, and all you just have to do is comment equity indexed, then once I have up to 10 comments saying equity indexed, I would make another video just describing that strategy that helps you to grow money and never lose money. Please don't forget to subscribe to this channel, and you will get invaluable financial education that you truly need. Thank you for watching. See you next time.